Hello, everybody. This is Jerry DeMeo from Family First Funding and MortgageZoom.com. And I am here today with our weekly mortgage rate update. So I'm going to ask that you please subscribe to the channel. Please don't be afraid to like and comment on this channel. You're going to get weekly mortgage rate updates. You're going to get the do's and don'ts of buying a home. You're going to get do's and don'ts of getting a mortgage. You're going to get do's and don'ts of your credit scores. You're going to find out about all the updates on all the mortgage programs that are available. So please don't be afraid to subscribe. So let's talk about mortgage rates. So let's go to the videotape. So here we go. So last week, this is where we were. Now, this was right after the Fed had their meeting last week, right here with this blue dot here. I'm going to put it there. And then last week when we did our update, mortgage rates were right here at this blue dot around 3.5 to 3.75, depending on some factors. And then rates actually improved a little bit during the week. And we were improved. In fact, we were as good as we had been. And then today, we gave back some of those gains. So what does that mean for you? Let me stop this share. So if you're doing a 15-year mortgage, conventional mortgage, you're probably around 2.99, 3%. If you're looking at a 30-year fixed mortgage, you're somewhere probably as low as 3.5 and somewhere 3.75 if you have excellent credit. Now, the good news is these are still historically low interest rates. I'm going to go to the videotape one more time. And so why do I say we're at historically low interest rates? This is the 5-year chart. And this is where we are today. As of today, we're right here, which is around, again, 3.5%, 3.75% in that range. And I want us to go across the chart. Now, you see these numbers up top here that I'm going through? These were during COVID-19, during the pandemic. These were rates during the pandemic. Other than the pandemic, this is where we are the last 5 years, right across here. And we're as good as we've been at any time other than during the pandemic. So I know the pandemic's not over, but we're really out of some of the pandemic help we were getting from the Fed, and they're sort of phasing out of that. I'm trying to keep it on real simple terms. I want to bring up another point. So a lot of clients are calling me saying, Jerry, do I need to lock into a rate today? What do I need to do? The Fed's going to be raising rates in March. So just so everyone understands, when the Fed raises rates, they're not raising mortgage rates. Mortgage rates are long-term interest rates. The Fed is raising short-term rates. The money that, like for interlending between banks to banks, like short-term money that typically affects credit card payments and short-term money. So now we're expecting rates to go, the Fed to raise rates 4 times this year, 3 to 4 times, at least 0.25%. Now the interest rates, the mortgage rates that you're seeing today already are anticipating that, and that has mostly been priced into the market already. So when come March, when the Fed raises rates, we're not likely to see rates go up unless right now we're expecting 0.25%, the Fed to raise rates 0.25. Now, if the Fed raises rates 0.5%, we could see mortgage rates rise. But if it's just 0.25, that's already been priced into the market. So you don't necessarily, those rates that we're talking about Fed, a lot of these rates have already been priced into our current mortgage rates. So I want to remind everyone again, please subscribe. Please like the channel with a big smile. Please, if you have any questions, you can set up an appointment with me live, face to face, just like this at www.mortgage-zoom.com. I want to thank you all for joining and have a wonderful, wonderful day.